Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day guys, welcome to the show. My name is Ross Stevenson. I'm going to be your host for the day. And ordinarily I'd be co-hosted with the Partnerships Manager for SPI, Tom Gilmore, but unfortunately he can't make it. But I do have to say, I think he's missing out on this show. We've got a gentleman in the studio with us who has got a fascinating story, and I've spent a couple of minutes just sort of getting a bit of background as to sort of how he's got to the position he's in today, and I've barely scratched the surface. But in essence, he currently has 6 properties, 33 tenants, and a portfolio worth 17 to 18 million, which is obviously a very impressive, but also quite an interesting story behind all of this. So I'd like to introduce James Dawson. James, welcome to the show.
Thanks, Ross. Thank
you.
It
is an absolutely impressive, portfolio that you've built, and no doubt along the way there's been some sort of upsides and some downsides, and some sort of nothing ever goes in a straight line. So I want to sort of pick through that today. But just to give a bit of background, you grew up in Newcastle.
That's right.
Schooled in Sydney.
Yes.
Previously a real estate agent.
Yes.
And you mentioned that you've been living off your rent and your portfolio since the age of around about 37.
That's right.
That just absolutely blew my mind. I think most people, to get to a position anywhere close to that, would be doing extremely well. So I think that one of the things that stands out, and for someone listening, you've got 6 properties and 33 tenants. How does that work?
Well, I love multi-tenant properties. So if I broke up my properties, one of the big ones has got 13 tenants, which is a small shopping centre. And one at Bondi we were chatting about earlier has got 5 tenants. So it doesn't actually take long to build up a large number of tenants. And of course, the beauty of that is you've got a lot of multiple smaller rents coming in.
Yes. So I think most people's, your mind goes to, hang on, 6 properties, you've basically chopped them up and you've got, 25 students living in a 10-bedroom house. Yeah. That's what I automatically went to. So you've obviously moved into the commercial market.
Yes.
Obviously have been very successful in there as well. But if we go back a few years and look at where things sort of started for you, when did you buy your first property and what was that?
So I was 18 when I bought my first property, 62 now, so it was a long, long time ago. And that was a little house, classic start buying residential property because that's all anyone seemed to ever do.
Yeah.
And bought a little cheap house in Islington in Newcastle. And then I was actually getting into real estate. And one of my bosses said to me, look, you'll never make any money, selling property or managing property as an agent. You've got to buy a property. So I was buying cheap little houses, renovating and really going hard. And actually at the time, the interest rates were 17%.
Blimey. How things have changed, eh?
That's right.
Bloody hell.
Yeah.
So at the age of 18, sort of how long did it take you to save up and get your first deposit together?
I was working out of school, so I think the first house cost $13,000.
Bloody hell.
And I needed maybe $5,000.
You need more than that for the deposit these days, don't you?
Yeah, that's right, for stamp duty even. And I remember that first property, I tidied that up and sold it for $33,000 and thought I'd won the lottery.
Look, you know what? As a percentage, that's incredible.
Yeah.
So $13,000. What would that be worth now?
It's interesting. I would say that would probably be worth $450,000 or something like that in that suburb, and obviously. Be great to still have it.
and that's the thing you do. Hindsight's a wonderful thing in property. I wish I still had it. And so similar for me, obviously, being from the UK, I bought and sold a couple of properties over there before I sort of moved over here. God, I wish I'd held on to them. But I think you're in whatever the situation you're in at the time, you look at, the cards that's in front of you and you play your best hand. And if that means selling it, and look, 13 to 33,000 is still a phenomenal result.
Yeah, that's right. And I think really it's all about moving equity into better investments. There's really nothing wrong with selling a property, even though I know all of us investors sort of say we wish we'd held on to some of the stuff. But from that property, I actually took that money and then bought a block of 5 apartments.
So you've gone from your first investment at 18 and sold it for 33,000. How long? What was the time period?
It was probably a couple of years, and I think by the time I was 21, I bought a block of apartments in Beach Street, Newcastle, overlooking the ocean, and had to that was $111,000 for the block of apartments.
Bloody hell.
And I had to borrow money from my mum and use that extra money and just renovate it. I was still working as a real estate agent, but renovating at night.
Yeah.
And, painting and doing everything and still paying 17.25% interest and still making a little bit of cash flow on that property. So it was just, going hard. But it was unsustainable.
So, sorry, just to be clear then, James, so you've bought this first property, sold it, and then you've gone and bought a block of flats.
Yes.
That's quite a big jump.
It was. And look, I can remember even when I was doing that my friends were, rushing around buying sort of, nice cars and things at the time, Holden Commodores or whatever was going at the time. And I had a pretty ordinary car, but it was a big jump. And I remember that I felt that it was a really big risk, but I thought, well, I didn't really have much to lose because obviously I had to pay my mum back a little bit of money. But
still living at home at that
yeah,
stage.
That's right. And then I actually moved into the apartments. One of the apartments would renovate it, move to the next one, rent the first one out and just keep going. But, I had quite good income coming in from my job, but really I hit the ceiling fairly quickly with being unable to buy anything else.
Yeah.
So I thought, there's got to be a better way. It was just the cash flow was the problem.
Okay.
Yeah. So it was, there was enough cash there to pay the loan, but nothing much else. And then one of my old bosses said to me, maybe you should look at some commercial property. And I almost stumbled into commercial property. And that's when the light was switched on.
Yeah, I think that it's kind of interesting that, it's because of someone said, hey, you should think about commercial, and that's what you've done. A lot of people who have that sort of fear of investment and getting on their foot on the ladder, and it's difficult to make that leap of faith and buy your first residential property. You've gone from buying a residential property at 18 to then moving into, a block of flats, which, some people will never get to then moving into the commercial market. What sort of research or network did you have around you to support you in decisions around commercial real estate?
Well, it's probably a little bit lucky that I was working in a real estate office and actually ended up becoming a partner.
And was that commercial sales?
They had residential and commercial, and I was working in the property management area of that company, and I started to realise that it was a lot easier to manage commercial properties. I mean, there was always, some issues with any investment, of course, but, tenants were in there on 3-year, 5-year leases. The shops around the office that we were managing, as compared to, my block of flats where people were in and out every 6 months, and often with drama.
So where was your first commercial property?
In Carrington in Newcastle.
Okay, and it was?
And it was a little old butcher shop that a friend of mine had actually bought at auction, and then he said, look, he was doing what I was doing. He was renovating houses, and he said, I have no idea what to do with this vacant butcher shop. And that was when actually a lot of the butcher shops were starting to close, because of Woolworths and all that taking on meat sales. So I asked my old boss what I should do, and he said, listen, get in there, clean it out, don't do too much, put an ad in the Newcastle Morning Herald, no internet then, stick a sign in the window,
bloody hell,
work out the rents based on the rents in the area, and next minute I had a tenant. And I obviously had bought it fairly well price-wise, but within 12 months the property was worth almost 3 times what I paid for it.
Bloody hell.
Just probably partly because I bought well, but also I got a good lease on it. So that's the biggest thing with commercial, is that pretty much the value of the property is based on the rental income. And that's just a simple thing.
Yeah.
And that just carries people right through their careers. Increase the rent, increase the value of the property, increase your equity.
So I'm not familiar with, you said Islington, did you say?
Carrington in Newcastle, which is an industrial suburb of...
Industrial suburb, so you've got a butcher, so it's on a major high street with other retail sort of...
Yeah, it actually wasn't a major retail area. In fact, the tenant that took the lease on the shop was making fretwork for Federation houses, so he used a little workshop at the back and had the showroom at the front. So it worked really well for him.
Yeah, okay.
And that property actually also had a fantastic upside, which I completely ignored and didn't do anything with.
Okay.
It had a massive backyard that I could have chopped off or built more, and I ended up selling the property without even realising that I'd given that away.
Oh, bloody hell. And you mentioned, when we were chatting earlier, sort of, maybe that's come down to experience now, is you said, what I like to do is find upsides where others don't.
Yes, yes.
Talk me through what that means.
Well, just put it simply, I mean, let's say you went down to Newtown or something in Sydney today, and there's plenty of buildings that have got a shop underneath, a little apartment above, and they're a terrace house style property. They're all over Sydney, all over the state, all over Australia, and in the backyard's a long skinny backyard which might only be 150 square metres, but because of the commercial zoning, quite often you can build more onto those bits of land. So you're basically buying the property based on the rents of the property now, but you're getting a free block of land if you can get approval for, say, apartments, which I've just done at Bondi. We put 3 apartments on the back of a small property. So essentially, you're getting a deal that could be a 10-year project.
Yeah.
So you're not just buying, say, one apartment and you think, right, I'm just going to sit there and collect the rent. You're buying something that you can massively increase the value of, manufactured equity in that property, just by getting approvals. And there's so many of those around. You've only got to look at it. Now, of course, it's easy with Google Earth and all these things.
Yeah, right.
You can cruise around. You don't even have to leave your lounge room. So very easy to do. It's just you have to have your eyes open to what's possible with upsides.
Yeah, okay. So with the commercial property, was there any period where, obviously you did the renovation and then you put your sign up? How long was it empty for before you got somebody in?
I think
did any panic set in? Moving to your first commercial?
Oh, it was. I remember being worried about it. I can remember thinking, wow, if this was a little flat, I probably would have had at least. But then, within a matter of weeks, it was probably 5 weeks or something. And one thing that actually happened when the tenant came in, they still had the old cool room and all this stuff inside the butcher shop. And I thought, I better start getting rid of this stuff. And then the tenant came in and said, no, I'll do all that.
Yeah, right.
And I thought, wow, this is good.
Yeah.
I'm running around trying to paint, 2-bedroom flats and
yeah.
And that was another eye opener.
Yeah. So what's the considerations around that first commercial property? What did you look for? What were you expecting in terms of that first purchase? And by that, what I'm saying is, if was there other empty shops along there? How big was the competition? Was it a no-brainer going, everything else is filled, I'm going to get this rented out? What was the drivers to that place?
It certainly wasn't a no-brainer. It was in a street that was a little bit patchy, I'd say. It had sort of residential, then it'd have the odd corner store, one of those classics, like something, I imagine if anyone knows Balmain, sometimes you go down the back streets and there'll be a little corner shop and then houses and then another corner shop. So it was a little bit like that.
Okay.
But I just thought, and with my old boss's advice, he said, look, if you charge the right rent, you will get someone in here. It's another big takeaway really is, having sustainable rent for someone to be able to operate their business in your premises is a thing that's been carried through all my investments really for the last 40 years.
Yeah, that's it, pricing things
correctly and not trying to screw your tenant because they're almost your business partner in a way.
Yeah, I think it's the difference between greed and need.
Yeah, that's right.
What do you need to get the tenant in and cover what you need to cover?
That's
and then
right.
that greed factor of, okay, well, I'm going to push it a little bit further, but then you could be sat there weeks turning into months going, shit, what have I done? And
That's
then,
right.
You're on the back foot.
Yeah.
I find the commercial space, interesting. I've not sort of invested into commercial myself, but I'm just interested in sort of the mechanics. If you drive down Parramatta Road in Sydney, which is a huge sort of, 6 lanes, and you've got shops either side, and every single one is, or not say every single one, but a vast majority are empty.
Yes.
There's signs all up down there. And
Yes.
I just look at those people thinking, who owns these properties? And they're just sat there, and no one, the competition must be absolutely so fierce. What are the chances? So I think sort of when you look at the residential market and you can go, okay, well, look, there's other properties in this area. They're all tenanted. Competition isn't that high. It's a desirable location. I can tart it up and, someone's going to move in. And then, is it the same? What do you look at in a commercial sense?
Well, that's actually a classic situation you just mentioned, driving down the road and seeing a whole heap of vacant shops. So firstly, for a person starting out in a commercial investment, there'd be no way that I'd be suggesting perhaps that you even look at vacant premises, and you'd be going to an area, there's even in towns that are perhaps a bit quiet, there's always busy little hubs where things are fully leased, or there might be out of 10 shops in the street, there might be only 2 vacancies.
Yeah.
So I would then refer to those areas rather than going to an area with a lot of vacancies. Not to say you can do well buying vacant, but that's probably a more advanced strategy.
So that's interesting, and you'd think kind of with what's available out there, you see an empty one, I'll be able to negotiate a bit harder, but you're saying, look, an empty commercial space, you got to know your stuff.
Yeah, I mean, the shopping centre that I bought a couple of years ago, 14 tenancies in total, not 13 actually, only had 3 tenants when we bought it.
Okay, fantastic. Look, I think that's a great time. Look, I want to obviously sort of dig into, some of these bigger commercial investments that you've made, but before we do so, we're just going to split to a quick break. Okay, welcome back, guys. As you know, I've got James Dawson in the studio with me. So we've been talking about, I guess, sort of going back to square one where James's investment journey started, buying his first property at the age of 18 and then sort of moving into what was a block of flats. And now we've sort of moved the conversation onto sort of the commercial phase of the investment journey. And it's a fascinating area because it's not something that I have dipped my toe into myself. So I guess we've just sort of talked about the butcher's shop that you had and sort of, I guess your recommendation or certainly your strategy to make sure that, if you're looking commercial, you should be looking at commercial premises with tenants that are already in place, as opposed to something that's empty, and that's what you'd consider as more of an advanced strategy.
Yeah, absolutely. I think when you initially start out, it's obviously much easier to work out the numbers when there's a tenant in there, and also, of course, to finance it.
Yes. Okay. So, I mentioned at the start of the podcast, you've got 6 properties and 33 tenants, I think it was we worked out. So just quickly talk me through what the 6 properties are, what that's broken down to, and what you sort of now currently hold.
Yeah. So the first big one that I've got is a shopping centre north of Brisbane, Sandstone Lakes Plaza, which we bought basically almost 2/3 vacant, I think. So got that one there. Bondi, a property there, some apartments and commercial. Newcastle, apartment and commercial, and also a development site attached to that. A couple of high-end rural property in Byron, which is a great holiday letting property. Another property in Byron with multiple tenants on it, residential. And residential block of apartments in Mackay as well.
Okay, so let's dig deeper on the shopping centre that you mentioned. You just said it was 2/3 empty.
Yes.
Does that not sort of go against what we just talked about in terms of? Hang on, that's. Well, I suppose it's a more advanced strategy, and maybe you feel comfortable that you're in that situation that you can do that now.
Yeah. Look, it's been a fantastic deal and very, very simple. So I looked at that property coming back from a surf trip from Noosa and stopped for lunch.
I'm up there next week, so I'm looking forward to it.
Yeah, so I drove through there, and it was a 6,000 square metre site with a fairly new centre built on it in 2012-13. It had a childcare centre attached to it as a separate building, and then 13 shops. And there was only 2 tenants in the shops, something like that, and the childcare lease. So
did that not scare the living daylights out of you?
Well, they were asking, I think, $3.5 million for it. I got my calculator out while I was having a coffee, and I thought, wow, based on the rents that the agent told me, I thought I'd be happy to pay around 2.1, maybe 2.4 million for this property, because just based on those 3 rents that it had, it would be cash flow positive about $40,000. So I ended up paying $2.3 million for the property. It was probably half replacement value of the building, and it was $40,000 a year cash flow positive based on that. Bank valuation came in at 2.3. Now, obviously, you've got to spend money to make money. So my strategy was to almost halve the asking rents for the vacant shops.
Okay.
And quite quickly leased 5 shops out on a 15-year lease to Plus Fitness, big gymnasium, and 24/7 gym. Then leased another couple of shops out, dance studio, hair salon, and now just in the process of signing a lease for a small supermarket for 3 shops, and I've got 1 left.
That's incredible.
But the thing is now, so it was almost 3 stages. First stage, say 40,000 cash flow positive. When the supermarket signs up, it'll be 180,000 cash flow positive. When it's fully leased, it's about 230,000, I think, cash flow positive. Okay. Now, when I say cash flow positive, I always base on 100% of the cost of the property. So if that property's cost me 2.3 to buy, 100,000 for stamp duty, and say 200,000 or 300,000 to tart up, paint and tenant incentives, I work out my numbers based on exactly what that property's cost me. And most commercial investors will do that.
Right.
Whereas, some residential investors will forget that they've put 200 grand deposit in.
Yeah, absolutely.
Convenient.
So the concern with obviously having all those empty spaces, it wasn't a case of it's empty because it's the wrong location, wrong area. And did you think that even if you half the rent, were you always confident it's just a price thing?
Well, I'm never fully confident. I mean, you always think, well, this is going to be work. But we really put in place, we thought, well, if we could halve the rents, we even had other ideas of perhaps converting some of the back shops to mini storage. And we were just lucky enough to, through good management and Facebook advertising and stuff, to get the gymnasium in, which created a lot of interest in the property. But we used, good Facebook campaign, signage. It's in the middle of a master planned suburb, and we just thought the previous owner unfortunately had mistimed it and mismanaged his numbers. So it was just taking advantage of what had happened to that guy who really needed to get out.
So it wasn't months of research, looking at the area, pouring over reports and data and numbers. It was by chance coming back from Noosa, I think you said, and stumbling by in many ways.
just rolling back a little bit, I was on the lookout for a small shopping centre for about 12 months.
Okay.
And this is what happens when you start to look at commercial. Because it's all number driven, you can quite quickly determine whether a deal's worth looking deeper into, even in 10 minutes. You can say, wow, I should go and look at that, because if what's presented to me is correct, and if I can tweak that, I can, really go hard and see if that's a deal. And typically commercial deals take a long time. You get 30 days or 45 days due diligence. So even if when that guy agreed to sell that property to me for that price, I've still got 30 days when I can really decide.
Okay.
So it's not like a residential deal where sometimes you go bang, exchange a contract and you settle in 4 weeks.
That's it.
And sometimes due diligence periods can run out to 3 months.
Right, okay.
So you've got control of that property.
Yeah.
And you can really then decide whether that property is going to work for you. So that's an amazing advantage with commercial properties.
Yeah. Was that your, or has been your biggest investment?
Yes. I did do earlier in Newcastle. I was involved in a large commercial development with several partners, and that taught me never to do that again.
Give me some insight into that.
It was a site called East Point, the Junction in Newcastle in the city, and I owned a property next door to it. We had the Newcastle earthquake, and it came and knocked down the building that was on that property. So next minute we'd sort of gone into this almost forced partnership to develop, and it just wasn't quite well thought out. And although I do love building and have done some developing, to me it's too long-winded, and I'm not really into having business partners as such, and that one was just too many sort of factions going on. So
you always invest on your own now? Is that
pretty much on my own now? So that's I've got some properties with my brothers, but that was a really great lesson actually. Yeah, to have early on.
Interesting. So when we were chatting earlier, you mentioned obviously, investing, it's never always plain sailing, and at times, whether you make the wrong decisions or not necessarily the best decisions at the right time. You mentioned a couple of properties in Potts Point that you purchased in the early 90s. Talk us through that.
Yes. So after the butcher shop, I thought, wow, I'm going to get into the Sydney market. And I think it was about 1991, and Sydney had been pretty hot just before that, but then it sort of, it had the sort of mini collapse, I guess. And I thought, okay, now's the time for me to get into Sydney. And I found a building in Orwell Street, Potts Point, around $300,000, a 3-storey building, 2 apartments above, all needed renovating, and a shop below. So I got stuck into that, renovated it, and rented it all out. I think, it was really quite good cash flow, but I was in my 30s. I had no one really to talk to. There was none of these podcasts available.
Yeah, right,
so
okay.
There was nothing to Google because there was no internet. So it was just one of those times when I thought, okay, now I want to buy something else, because I wasn't working for anyone. I was just working for myself. So I thought, okay, I've got to sell this property, get some equity out and do something else, and sold it for more than double than what it cost me. So I thought that was fantastic.
Yeah.
But if someone had told me at the time that I could have strated that property up into 3, I could have sold the 2 apartments and kept the best part, the commercial downstairs.
Yeah, right.
And moved on. So I've certainly gone on to do that now.
But again, as we talked about earlier, it comes down to experience.
That's right. And I think, I've always been a bit of a lone wolf, when I was, and the thing was, I guess when being the age I was, no one else my age that I could find was doing anything pretty much like I was doing, whereas now, you've got groups and, Facebook groups and things like that, so you can join up with, people who are a similar mindset, similar age, and get that advantage of being able to chat to other people.
Yeah, okay. So you mentioned back in the day, you don't have access to, podcasts like these and what have you. You talked about you wanted to get into the Sydney market, and you've obviously chosen Potts Point. Where did you get your information? Why Potts Point? Where were you gauging? Is it back to the old classic? Have a conversation in the pub with a mate, and he mentioned something, and that's the driver, or where were you pulling that information from?
I did drive around, but in those days, no internet. I used to actually cut the newspaper ads out of a paper, stick them in a book, and I'd be in Newcastle, get in the car, drive to Sydney, and quite often they'd have the addresses on the property, so I'd cruise around. And because I liked renovating, and my uncle and my cousins lived at Paddington, so I was staying there, so I thought, this is pretty close by, I'll cruise around, and just latched onto it. But there was really no rhyme or reason, but I could tell it was obviously a good location.
Yeah, right.
But it's so easy now.
I was going to say, how's things changed since from sticking the properties into a book and driving around? If you think think about maybe your most recent investment and, your due diligence around, picking that particular property, and we can talk about what that property was, how has that changed in terms of your research?
Oh, look, I just think this is the golden age for investors and young people or anyone getting into property, because you've got the internet, you can be in a location, you can go to Noosa next week, pull your phone out,
that's it,
have a look what's available, have a walk around, then you can do a lot of research just by emailing agents, picking up the phone, talking to them, Google Earth. It's just fantastic, actually.
Yeah, you mentioned Google Earth a couple of times now. Is that a key sort of tool that you use on that commercial side of things?
It is, because really looking at a picture that's presented, say, in an advertisement or an information memorandum, which is all the info on a commercial property that an agent will send you, is very focused view.
Yeah, of course.
And nothing's ever as good as it looks in the pictures.
Yeah.
But just looking at Google Earth, you can go to a country town and walk up and down the street and often go around the back lane. And I love doing that.
Get a good feeling.
Looking at the aerial pic and saying, oh, look at that big backyard. What's doing that? You can even see the boundary lines, of course, quite often. So I say to a lot of people, listen, don't go crazy running around all over the place. Really do some research. And what I find is that people will then find that a certain style of property and location will resonate with them, and they can do a huge amount of research just by being on the phone, online, Google Earth, etc., before they even drive to that location and have a good look, which I think is super important.
Yeah,
definitely important to go and have a good look at it.
Absolutely. So what was that last purchase? What was your most recent? Okay, so I guess the next area that I'd like to sort of chat about is talk about obviously your most recent purchase, but also really sort of follow up on what's next for James Dawson and what the future looks like. But before we do so, we're just going to jump to a quick break. Okay, welcome back. So I have James Dawson in the studio with me, and obviously we've talked about sort of his investment journey from residential into commercial and into some really sort of big meaty investments with the shopping centres. Also talked about obviously some maybe, not say wrong decisions, but some opportunities that were missed with some property around in Potts Point. I guess sort of, right at the start of the podcast, I talked about, having 6 properties, 33 tenants, living off your rent since 37 and a portfolio worth 17 to 18 million, which is just an absolutely phenomenal position to be in. So I'd like to sort of find out what's next on the agenda for you. But let's just go back one quick step. So the last property that you've purchased, what's the last investment you've made?
The last one is that shopping centre.
Oh, it is a shopping centre.
Yeah,
okay.
Sandstone Lakes Plaza. So it's been a 2-year project, I guess.
Okay.
And these one of the beauties of some of these style of properties is that they can be an ongoing project in developing, exit strategies or, other things you can do with that property that just further enhance the cash flow and the rent and the value.
Yeah, okay. So you've obviously lived off the rent since 37. You've got 6 properties. How much of this time, and obviously you're not working, so how much of your time is spent actually looking after the portfolio that you have today?
Look, I have managers. I don't manage any properties myself, and
Okay.
I highly recommend that no one ever does that.
Yeah.
But so look, I like fiddling around with properties, but in a sensible manner. So with, say, Sandstone Lakes Plaza, we've actually had a subdivision approval to subdivide the childcare property off. So you start to have these...
You're constantly playing and tinkering and looking at...
but really with a view to developing exit strategies. I'm 62, so, one of the strategies could be that I sell that childcare off or strata up the shops and sell them off in individual pieces if I decide that I want to buy something else or, just to diversify into a different thing or build a new house for myself or whatever's going on. So, and I always say that to people, look, it's a really great thing to look at exit strategies when you get into something, before you actually get into something, because that's where the safety net is.
Yeah.
It's great having positive cash flow, and it's great having a buffer that's come from that positive cash flow.
Yeah.
But overlaying that, if you've got some exit strategies where you can chop one property up into multiple parts, it's a brilliant thing. If you're moving into retirement, you might say, well, look, I'll sell one of those shops off every year for the next 5 years. And,
Did you, when you first started back when you were 18 and picked up your first place, did you ever have a long-term plan or goal in mind, or did you ever think that you'd be in the situation you are in today?
I sort of did, actually.
Yeah, okay.
I really, I remember when I was working as a young real estate agent and sitting in the office on Saturday mornings, and I just hated it. I just really wanted to have my own money and my own time is just the most important thing to me. I mean, at the moment, I surf every day at Byron, and I might spend a couple of hours in the office or, answering my emails on the phone at Watergo's car park or something, but I just, or, doing my vegetable garden and stuff like that. I just really want my own time, and I actually find appointments are a bit of a struggle for me.
Well, you turned up on time today, so
I did. I did, but if someone says, "Oh, you've got an appointment at 11 o'clock tomorrow morning," I don't relish it.
No, I know what you mean. I've got a long way to go.
Yeah. But that was the overall thing. I can remember even saying to my dad early in the day, as my dad was a doctor, and when I had some second thoughts about property very early in the piece, when I thought I was going, too hard with the renovating, he told me to stick with it. He said, "Look, if you can run your own show and control your own time, that's a really great thing."
And has it always been property? Have you ever done stocks and shares, or is that?
I have. Look, I have had some shares, that I bought on the advice of an accountant, and I just really. To me, it wasn't much of an interest. I've still got some shares, but it's
a small consideration compared to.
I believe, for me, rent collecting is the easiest business in the world, as long as you're creating a win-win situation with your tenant. So I just, if I can create a good space for a tenant, whether it's, I still love residential property, but whether it's residential or commercial, good sustainable rent for a commercial property with someone who's operating their business there, creating their livelihood.
Yeah,
it's a great thing.
Yes, fantastic. So you mentioned last couple of years has obviously been sort of focused on the shopping centre, which sounds as though you're sort of in a really comfortable position and pretty much tenanted up there as well. Is that you done now? Are you still on the lookout for the next purchase, or are you happy with where you're at?
Yes, I am on the lookout. I'm actually most of my property are retail. I've got cafes and things like that, and hair salons, all those sort of. Actually, it's a good point. Tenants that people have to go to get something.
Okay.
Like childcare, hair care, gymnasiums, supermarket.
So like a retail, rather than an office space.
Yes. And there's nothing wrong with office space and industrial, but
yours is you're a retail strategy sort of.
Pretty much, but I would like to get some industrial in Byron Bay.
So you said obviously that transactional, someone comes in, has a haircut, comes in and does X, Y or Z. Why?
Well, the thing is, obviously, there's always been this thing about people saying, commercial property is all going to be vacant because everyone's doing everything on the internet. Well, you can't get your hair cut online.
Yeah, that's a really good point.
You can't go to a childcare online. So that's sort of an obvious thing. And when I was looking at that vacant shopping centre, I said, okay, we've got to put tenants in here that are sort of live tenants that people have got to go to, even if it's a dog salon.
Yeah.
So that's very important. Whereas obviously you wouldn't probably relish having a video store as a tenant these days.
Yeah.
It's not to say, I don't actually think that the internet will kill retail. I mean, you look at JB Hi-Fi, for example, they have a big online presence, but then their stores are benefiting from that online presence as well. So they've sort of got a combination strategy.
Yeah, okay.
Sort of bricks and internet, I guess.
Have you ever been, I suppose it goes hand in hand with the retail space that you have, that will be that type of transactional business. But have you ever been in a position where you've said to a tenant, you're not the right kind of business for us?
Yeah, look, quite often when you're looking at tenants, really you have to get their full background, particularly say someone who's say like a cafe tenant, for example, and you'll say, well, what sort of fit out are you going to do? And they'll say, I'm just going to go and get some plastic chairs at Bunnings. And then another tenant comes in and he says, look, I plan to spend $250,000 on a fit out in your shop.
Yeah, guess what?
Because I want my business to really fire. And I say, okay, you're the guy for me.
Yeah.
So that's very important. And, so there's all these sort of little stages that you get through, but it's all quite logical and common sense when you get into it.
It sounds like common sense, and you say, you mentioned earlier, it's obvious, and it's obvious when you say it, but again, unless you have the experience and you've been through that process a few times, which you have, it can be quite simple stuff.
Well, one of the biggest differences is there should be no emotion really in any investing, but certainly with commercial property, you can have ice water in your veins. You're just focused on the numbers. You're not really looking at a luxury apartment thinking, this would be great to live in. You're looking at a shop saying, okay, I just want someone to have a really great business in here. I want to collect the rent and I want everything to go well. So, it's just a total...
different mindset that you're in when...
Different mindset entirely,
That's interesting.
and totally unemotional decisions on investment.
And again, when you're not clouded with that emotion, you tend
That's
to make
right.
the best and right decisions.
Yeah, exactly.
Mate, James, it's been absolutely fantastic talking to you. Thank you so much for coming in and sharing your story and your journey. Like I say, I'd love to sort of dig a bit deeper, and perhaps we'll get you in for another podcast where we can sort of cut deeper into to some of the investments and some of the yields on these properties, and sort of again how your next stage of the investment journey sort of moves forward. But no, I really appreciate your time. Thank you for coming in.
Great, thank you. I enjoyed it.
Excellent. Guys, thanks for joining us. Make sure you check out all the other podcasts available on the network. You can also follow us on the usual social media channels or email us at editor@smartpropertyinvestment.com.au. Thanks for joining us, and we'll see you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.